Let's kick off now with Johnson & Johnson, which is one of the world's largest healthcare companies with divisions focused on pharmaceuticals, medical devices and consumer healthcare products.
Right, so this is one of the few global corporates left that still has a AAA rating from the debt issuance agencies, like S&P, Moody's, that kind of thing. Not even the United States government has a AAA anymore, but Johnson & Johnson does.
Market cap $290.4 billion, price to earnings ratio 17.7, dividend yield of just over 3%. This has long been one of Paul's favorites. How do you feel about Johnson & Johnson?
I'm very, very excited about the company. I think, just to maybe mention it, this company has over 50 years increased their dividend every single year. So no wonder they've got such a great rating. And also, 70% of the products that they sell worldwide are either the number 2 or the number 1 choice for consumers. So on the healthcare side, I think that's a great sort of story. The rest of the business is also quite solid. They've built up a very, very diversified sort of healthcare business for themselves over the years, and exposure in markets literally all over the world. Price has come under pressure, and I actually think this offers an opportunity for investors.
Is it an opportunity, Paul? But we need to get that share price graph up.
Yes, because the price has come under pressure in the sense that it hasn't done as well as the rest of the market. That's a 5-year chart. I think we all know global markets have been strong over the last 5 years, and you can see there it sort of peaks at about 115 or thereabouts, and it's sort of dragging its bum along a little bit at 100. So what's going on there? Well, I think the feeling is that it's just been a little bit slow, and Alex Gorski, the CEO, perhaps hasn't done what the market wanted, which was some kind of breakup or reorganization of the company assets.
Well, is this a buying opportunity? What are the risks to the downside here?
Well, that's very tough for me. I think the risk is probably price risk for the shorter term when it comes to the share price. But over the longer term, the earnings drivers for this company is very strong. And I think that, when you get an opportunity to buy something that's lagging the market for no particular reason, then it's time to buy.
Can we be 100% sure that it is lagging the market for no particular reason?
Look, the reason I like this one is because if you have limited funds available for your international diversification strategy, this gives you the big 3 components of the healthcare market. The one is the pharma stuff, so they've got some really high-end stuff that they use, like Concerta, for example, which all the kids are taking for attention deficit disorder. That's one of theirs as well. They've got drugs like Xarelto, which is for blood clotting, big blockbuster drugs, and more coming through the pipeline. They've got the medical devices area, so that's hips and joints and knees and all that sort of thing. Very big spending area. And then all the private personal care stuff like Band-Aids, Rogaine for men whose hair stopped growing, what's the other stuff here I'm seeing? Band-Aids, yes, Listerine even, mouthwash, Visine, AccuView.
So
AccuView is huge.
AccuView for
contact lenses, exactly. So you get the full suite. It's a bit like buying the biggest, largest player in the sector in order to give you instant diversification.
Hot or not,
Mia?
Very hot.
Yes.
That's the first time I've ever heard of very hot from you. Paul, hot or not?
I think it's a good one, and it's possible, of course, that the board will take certain steps. They have an enormous balance sheet and great cash resources and huge debt availability. What I mean is they can take on more debt if they want to. So it's not impossible that they may swoop on one of the other global pharma players, which is currently in a position of weakness, like GlaxoSmithKline or one of those sort of players, and bulk up the business even further.
This is a very hot in your book.
Hot for me too, yeah.